You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is time once again for a little program we like to call around these parts TWIFO, a.k.a. This Week in Futures Options, a program where we break it all down. Everything's going on the options front over there at CME. You never know what's going to make it on the show. That's why you got to tune in every week. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting The Options Insider Radio Network. Hope all of you out there in the Secret Handshake Club enjoyed that little taste of the OPR 100th episode, spectacular, remastered, recut. It's kind of a fun one, a little bit of a sneak peek of what was trading back then, so it's a bit of a time capsule. Also sounds a lot better. Also available for the first time all in one episode, and for a lot of you, I know it's new, so hope you enjoyed that taste of it. You can find the full thing. Everyone else out there listening after the fact can as well. If you're subscribed to the full network, you'll get it. Otherwise, go check out Options Playbook Radio. If you haven't, it's a great show, and that OPR 100 is a fun snapshot in time and some great special guests, all remastered. It's really fun stuff. Of course, you don't know what I'm talking about. The Secret Handshake Club. You know where to go to learn more. You, of course, join us live throughout the week on all of our different shows, as well as, of course, join us for our pro Q&A sessions on Tuesdays, Options Oddities on Fridays as well. TheOptionsInsider.com/pro is the place to go. I see you in there, Nichols. TWIFO time. Woot. Woot back to you. I'm excited as well. It's always fun here to kick off some TWIFO action. I'm flying solo on the show today, so you know that means two things. First off, got a whole bunch of futures options products I'm going to be able to sink my teeth into, which is fun. And B, you folks are going to have a chance to join me on the show today as well, so it should be a fun one. Let's kick it off the way we always do. It is time for the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and the Shakers, the portion of the show. We break down all the big explosions to the upside and the plunges to the dark side over there at CME this week. If you want this report for yourselves in your hot little hands, a couple of places you can go to get it. CME Group tweets it out usually right before showtime, so you can follow at CME Group on Twitter. You could see it there. We usually tweet it out or retweet that tweet out there as well. Otherwise, you need to have the pro grade quick strike to get access to it. So check out those tweets if you want to see it for yourself. And of course, you know, it's nice flying solo because I get to choose. Finally, how long we've been doing the show, I've never really gotten to choose where we start our voyage on the show. So I'm going to do that today. And you know what I'm going to choose. Listen, I'm going to choose Dark Side. Let's do it. Off to the red with us. Number 5, gold. Some rough week for the metals out here this week. Number 5, gold off 3.3% this week. Number 4, Nat Gas. Nat Gas making it back onto the Movers and Shakers report this week, off 3.36%. So just managing to edge out gold to the dark side. It was number 3 in the other direction last week, up 2.61%. Number 3, back to the metals. It's platinum, off 4.02%. It was number 5 in the same direction last week, off 5.12%. So a rough couple of weeks for platinum. Before you ask, we talked about it last week, only 100-odd contracts on the tape in platinum. So not really a good option story to parse there. Number 2, once again to the metals, it's silver, off 7.09%. The only thing that could manage to usurp all the metals out there on the dark side this week was lumber, once again topping our dark side movers and shakers, off a comparatively quiet for lumber, off 8.07%. This thing has moved up to 20-odd% sometimes in a week. So this is 8% is a quiet week for lumber. It was number 1 in the same direction, for example, last week, listeners, off nearly 15% last week. And again, same deal before you get all fired up talking about lumber options, about 70-odd contracts on the tape out there. I wish we could sink our teeth into lumber because we would pretty much be talking about it every week. But alas, that is not possible, listeners. It's gone out to the light side now, where our old buddy Sean used to hang his hat every week. Wheat got some ags to the light side this week. Wheat, number 5, up 2.35%. It was in the exact same spot last week, up 1.63%. Number 4, KC Wheat, so managing to usurp its Chicago cousin there, up 2.78%. It was in the exact same spot last week as well. Number 4 to the upside, up 2.59% last week. So a good couple of weeks for wheat. Number 3, back to the metals. It's palladium. Metals all over the place this week. Palladium up 6.63%. It was our number 1 mover and shaker to the upside last week, up 7.03%. Once again, before you get all fired up, no contracts really to speak of on palladium from an options perspective. So not going to hang our hats out there. Number 2, it's Bitcoin, up 8.62%. It gave some of that back towards the end of the week, but still a good week here for Bitcoin. And number 1 with a bullet this week, iron ore. These are lumber numbers, up 17.94%. Now, before you get all fired up, get all excited, let's do it. Let's sink our teeth into iron ore. Fortunately, I cannot accommodate you, listeners, because there are no options to speak of on iron ore. So once again, we are left to twiddle our fingers as we keep on rolling. Since metals are pretty much dominating our tape to the dark side and indeed a bit to the upside as well, we got to start there. Let's head out to the metals.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, everybody, let's do it. Time for the metals. Since gold is our number 5 dark side mover this week, it's also the most active metals options contract, at least from the precious perspective. Let's hang our hats out there first. Coming into showtime, gold at a 1751.2 in that front future, off nearly 10 handles or about 0.5% on the week. Seems like a far cry from the north of 2,000 level everyone was celebrating not too long ago. At least all the gold bugs were celebrating out there. In terms of paper, decent week out there. 160,000 contracts on the tape this week. So that's definitely enough for the number 1 precious spot out there. In terms of where the action is this week, 26.1% of it coming in the SEP contract that has about exactly 14 days to go. So right at our cutoff. How obliging, how nice gold. I have a feeling we're not going to find that if we go to equities or some other spots, but gold, at least playing and adhering to our 2-week cutoff rule out there to analyze vol and skew. Let's talk some vol out here in gold. It's never really been a high volatility product. When we do see those sparks of life in gold vol, they are relatively short-lived, and kind of a whole lot of nothing on the vol front this week as well. About a 1308 in that SEP contract. That's off about a tenth of a point this week. So not a ton of vol to start with, and it didn't really move that much, which is kind of what you expect. For gold from a skew perspective, let's see. Last week, the puts 5.1% rich to the at the money, so a bit of a bid to the puts. This week, still bid a little bit less, up 4.6% bid over that at the money vol. There's just a refresher there. That vol we quote is the at the money vol, 13.08, and then the puts are 4.6% rich beyond that 13.08 levels. Let's see, listeners, now what's going on the call front. Calls last week 1.7% cheap, so they had a little bit of a discount to that vol level, and this week they are almost even. They're about a tenth of a point, so they're effectively unched to the at the money. So that upside call vol is still around a 13.08 out there. So not a lot of bias in any direction to the calls. And that's interesting because metals, if you followed them and listening to the show for a while, you know, metal skew tends to move around quite a bit and has some interesting ebbs and flows. The puts get bid, the calls get bid. These days, a whole lot of nothing on the calls, which is kind of interesting. Let's see what's lighting up the tape out there in terms of the most active contract in gold options at CME this week, listeners. And if you said 1,700 puts, roughly $50 out of the money puts, you are the winner chicken dinner here in September. 5,500 of these about have gone up this week. The most active day was Tuesday with about 2,000, 1,700 on Monday, 1,600 on Wednesday. Not too much going up today. Looks like a lot of these were closing throughout the week as well. So some folks maybe taking these 1,700 puts off the tape. Maybe they were long them and they started taking them off as we started to get the sell-off, or maybe they're short and we were getting close to that strike, getting a little bit nervous. Either way, a lot of closing paper on the 1,700 put strike here in September. Also probably why we saw that put skew come in a little bit. So probably a little bit of buy-in paper here on these 1,700 puts, but not a ton because that skew didn't move a whole heck of a lot. In terms of activity, though, once we get outside of September was the overall most active month with 26.1%, but the right behind those 1,700 puts in terms of most active contracts was June of 2022. That's interesting. And we have the 18 half calls. We always talk about funky upside in the gold, the metals in particular, but gold is usually the one that really has it. And let's see what we got cooking here in the 18 halves in June of next year. Doesn't that sound so futuristic, listeners? 2022. It sounds like we're reaching far into the distant future, but it is indeed only next year. 18 half calls, pretty active earlier in the week and again today. The 1,500 trading on Monday, over 2,000 going up on Tuesday, and nearly 1,000 hitting the tape again today. For some reason, I don't have OI numbers on these. I'm going to guess these are probably opening, but I can't imagine there's a ton of OI on the 18 half strike in June of next year, but I'll have to dig in to see for sure. But that's our number 2 contract with 4,600 going up this week. And unlike what we usually see with these funky kind of longer term out of the money call trades, I don't see another fly leg or ratio leg against it. The 2,000s traded a little bit, only a few hundred times. So it'd have to be like a 1/10 if that was the ratio. I don't think they did that. So it looks like it's straight up 18 halves lighting up the tape this week, listeners. That is not what I expected. By the way, there is about 13,500 contracts open on the 18 half strike in June. So it could potentially be closing. That is more than I expected out there. So we shall see what is afoot. Are they giving up on the 18 halves already? I mean, maybe. It is possible. If you got that much time out there, you know, maybe I don't see them rolling down to a new strike if that's the case. So there could be someone giving up the ghost out there in longer term upside in gold, but it does seem like it's a bit early to pull the trigger on those if that is the case. If that's not long term enough and not far upside enough, let's go out to Dees of next year, Dees of 2022. We've got the 2,500 puts going up 1,280 times. And it looks like that was slightly closing on Tuesday of this week. Tuesday, we also had the 1,800 calls trading 400 times and the 1,900s trading 530 times. So if that's a fly or a ratio, the numbers are a wee bit weird opening on both the 1800s and 1900s. So maybe a bit of a vertical there and then taking off some 2500s. That's a strange one. I don't. Looks like no OI to speak of coming into those trades on the 1800s and 1900s, and about 5,000 open on the 2500s in Dece of 2022. So maybe they took some of those off and decided to roll down to a more relevant vertical, 1800, 1900. Either way, a lot of action, and all of it there on Tuesday, which makes me guess maybe it is related, but the strikes and the numbers don't line up. You know, if it's a day that ends in Y, listeners, something funky is afoot in the upside in gold. We could do a whole show just on the weird, funky action out there in gold. But some other metals were lighting it up as well. And I got so excited talking about the gold, I forgot to tell you how to find these reports for yourself. CMEgroup.com/TWIFO is where you want to go to get these. Then go into that drop down you're going to see over there on the products. Go to metals and then to precious. We were just hanging out in gold. Now we're going to go move that drop down out to silver, if you are so inclined. I like to then go into the expirations, and I hit select all, listeners. That means I get to see everything all at once. But be warned, if you're doing that, you're okay in silver. If you're doing that in like in Eurodollars, for example, it's a lot of data. It may be a bit overwhelming. Maybe you want to stay with that opening kind of snapshot view to make it a little bit more manageable. But then again, to each their own. Silver, let's see what's going on in silver this week. Silver is, usually a number 2 out there in the metals. This week, decent paper, not a ton. 23,000 contracts on the tape. Contrast that with what we just talked about, well over 100,000. In gold, you can kind of see the relative discrepancy there in terms of volume. Silver, like I said, 23.16. It's off this week, almost 5%, I should say, 4.8%, off about 1.2 points. We're at about, again, a 23.16 in that front future. And of that 23,000 contracts that has traded this week, almost half, 40%, went once again in that SEP contract. Once again, the metals obliging us here on the TWIFO program. So let's hang our hat out there. The vol in that SEP contract at about a 24. So not quite 2x, but pretty close to double the vol we're seeing out there in gold, which is interesting. I know Uncle Mike's a big silver fan on our option block program. And certainly from a vol perspective, a little bit more juice to be wrung out of that stone there. Up about a point as well. So that vol getting a bit of a lift this week. In terms of skew, I've got some skew action this week as well. Last week, the puts were pretty bid, 4.1% rich. Well, this week, they've come in almost entirely. They're pretty much even with the at the money now. So all that premium in the puts got crushed. The calls last week were 1.5% cheap. This week, 3.1% rich. So that skew has swung pretty markedly. The puts were bid last week. Now they're pretty much flat. Last week, the calls were slightly offered. This week, they're bid. So big swing to the calls. Let's see what's going on out here in silver. Listen, maybe we can find out why that is the case. The most active contract this week was the 20 puts here in September, doing about 1,000 contracts this week. Again, only 23,000 total have traded out here. Now, the most active day is actually today, about 500. So half of that paper going up today. Obviously, we don't know the OI change for today. The rest of the week, the most active day was Monday with about 300. Slightly closing there. Those puts, again, about $3 and change out of the money. So I did not expect a contract with 2 weeks to go, $3 out of the money to be the number one contract, but that appears to be the case out here this week, followed by the 24 calls, also in September, doing about 750. The most active day was Monday with about 385, so over half of that going out there this on Monday. Again, most of that opening. So opening to the upside on the 24 strike, which is probably where that call bid came from. Also saw some action on the 25s as well, also opening throughout the week as well. So looks like maybe some opening upside call love this week. It's the bid we saw moving into that skew. Put-wise, though, we saw those 20 puts coming off, and perhaps that is what crushed that. Looks like a decent chunk of that was closing. Again, we don't know today's action for sure. 22 puts also pretty active with about 600, and they were kind of back and forth. The lion's share also Monday for those, and slightly closing. So, again, no real indicators, but it does. Obviously, the puts got crushed pretty good this week, so had to be some selling paper in there somewhere. Let's move a little bit farther out to see if we can see any other aberrant prints out here. Silver not quite the same as gold. We don't see as much of the, shall we say, outlandish paper. That said, there's a little bit to be found out here. If you want a little bit of upside optimism, upside swing for the fences, call it what you will. Looks like we got the March 50s. Yes, 5 O's. So silver has to more than double, trading 165 times yesterday and 362 times today. Total of 527 of the March 50s, 5-0s, have traded this week. That sounds like, remember back a few months ago, listeners, everyone was all fired up about the possibility of a silver squeeze. Well, you need something like that to make these 50 calls. I'll have to tell you, Uncle Mike, he'll be excited to know that someone's playing on the upside. Obviously, a lot trading today, so we don't know the OI, but it was opening mostly yesterday, so not a lot of OI on the strike. So it's all opening paper on the 50s, as you probably would imagine. Not a ton of people playing there. Also saw the 30s trading this week as well, but different days, so they weren't verticals or ratios. It was just straight up action on the 50s this week, which is, again, not what I expected. So, gold usually leads that trade with the weird upside, but this week, silver come into play as well with the 50 calls. What do you think, listeners? You think we can be at a 50 handle by March of next year? That would be quite the move in silver. That would maybe potentially qualify as a squeeze. Let us know your thoughts, listeners. Well, we're going to keep on rolling. Platinum, obviously, not a lot of action there from an options perspective. Palladium, same deal. And iron ore, unfortunately, same deal as well. So I think next we will hang our hats. We got Nat Gas, number 4. Let's head on out to energy.
It's time to tap into the deep options well of black gold, Texas tea, Nat Gas, and more. It's time to talk energy.
All right, everybody, let's do it. Let's talk some energy. Go back to that same drop down, listeners. Go out of the metals, go out into energy, and then go into beyond crude oil. I may go back to crude. I think you have a question about that. But we're going to start things off in Nat Gas today. Go to the Nat Gas LN, as it is shown in the paper, in the drop down there. That'll get you the pretty much really only active contract out there in Nat Gas. And it is pretty active. 462,000 contracts on the tape. So compare that to the 23,000 in silver and roughly 100,000, 160, 130, whatever it was out there in gold. And you get a sense for how active Nat Gas really is. Coming into showtime, Nat Gas, the future, we a little bit shy of that 4 level, 390 out there, giving up about 5.65% just since Monday's session, about a quarter of a point almost out there. In terms of action, once again, SEP obliging us here. SEP, of that 462,000 contracts, 41% of it going up there in the September contract. So a lot of paper here in very near dated. Again, this is kind of what we talked about for a while. The weeklies have always seemed to be problematic in the energy complex, particularly WTI, but something similar with Nat Gas. And now CME talking about the WTI weeklies getting more action. And then also we're seeing a SEP contract that has eroded down to effectively a weekly, doing a ton of paper in Nat Gas. So it does seem like near-dated contracts getting a little bit more love out there in the energy complex these days. In terms of vol, this is obviously a more volatile product here. It's coming off a bit this week. 38.5 vols where we find ourselves, off nearly 6 points from this time last week. In terms of skew, also skew swinging around here a bit in Nat Gas. Last week, the puts were kind of unched to the at the money. Not much love for them. This week, 5.7% cheap. So puts getting crushed. Last week, the calls, the whole skew was flat. Last week, the calls were about 0.5% cheap. The puts about 0.4% bid, so not much of a bias in either direction. Now, like I said, the puts are nearly 6% cheap, and the calls nearly 4% bid, 3.9%. So big swings in both directions out here in Nat Gas, which is kind of interesting. Let's go out and see what the most active contract was this week. It does seem like it was the SEP 4 quarter. It does seem like a very outlandish strike not too long ago. But yeah, we're a little bit shy of the 4 handle right now. So 4 1/4 just sounds so rich, but it wasn't that long ago. Let's see. 4 1/4 calls doing nearly 30,000 contracts this week. Pretty much the lion's share of that going up today. 19,500 contracts on the tape today. So obviously we don't know the OI swing there. Wednesday and Monday also close to each other. 5,000 on Wednesday, 4,000 on Monday. Both of them closing by about 1,000. So obviously a lot of back and forth trading on that 4 1/4 strike, which is not surprising. We weren't that far from that when we kicked off the week here. So a lot of action on those 4 quarters. Again, we saw the call wing mostly get bid up this week, so had to be some buying out here in the call wing. Number 2 most active contract looks like it was the 4 3/4. So If 4.25 wasn't optimistic enough for you, here comes 4.75, doing 21,300 contracts this week. The lion's share of that one actually came on Monday, 13,500 going up on Monday, about 2,000 of that opening. So interesting action there on the 4.75 calls, followed by about 3,000 today and 2,200 on Tuesday and Wednesday. So again, some folks had to be buying some of this stuff to get that skew to swing the way it did. Let's look a little bit farther out. Let's see. Number 3, we got the 4.5 calls. So pretty much a call strip here in September was where the action was this week. 18,000 of the 4.5s. The busiest day was Tuesday at about 7,000. Also interesting to see each of those strikes had a different day where they were dominating the tape. So today for the 4.25, Monday for the 4.75, and for the 4.5s, it was Tuesday. So weird stuff out there on all these strikes. Interesting stuff afoot here. Let's look a little bit farther out to see if we can find any other interesting, surprising prints here in NatGas. Look at it mostly around the 4.75. You know what? There is a weird one here, though. Let's go out to Jan of next year. Jan of 2022. Again, that sounds so futuristic. Wow, this looks like a gold type trade. On Monday, we had 1,000 of the Jan 10s, 10.0s. So again, like I said, we're shy of the 4 handle now. That already is kind of rich for NatGas. The 10 calls going up 1,000 times. Looks like the 12 halves going up that same day as well. So it looks like a 10-12 half vertical going up, all that opening 1,000 times on Monday. Wow, looks like there is some OI to speak of on the 10 strike. About 4,000 are open on the 10 strike in Jan. So it is possible that's a bit of a roll. That's, wow. I thought the silver one was optimistic, but 10-12 half vertical in January and NatGas. Depths of the winter, maybe they're foreseeing another one of these crazy aberrant outages we have somewhere and a pipeline going off, something like that. And that's what it would take, I think, to hit a 10 handle in NatGas. But wow, that is not what I expected. So I was joking earlier, listeners, about the lack of crazy aberrant upside prints in NatGas, but they obliged us this week. 10-12 half, 1,000 times in January. What do you think about that one? Does that have a chance in hell of coming to fruition? What would it take to make the 10-12 half a relevant trade? Intriguing stuff here, listeners, as we keep on rolling. I'm going to cheat. I mentioned I'm going to get a bunch of you on the show today as well. We got a listener question. By the way, you folks are there in the Secret Handshake Club. You guys always get bumped to the top of the list. And let's go to Alan here. By the way, listeners, you want to learn how to join said club, theoptionsinsider.com/pro is the place to go. You'll learn the secret handshake there. Alan, one of our members there, says, what mysteries does the WTI option skew hold in store for us this week? Well, Alan, since we're hanging out in energy anyway, we might as well pop up to WTI, go up to that same drop down, listeners, get out of NatGas, go up to crude oil, click on WTI, and then you too can be off to the race. This is the one that's kind of come under some interesting scrutiny of late out here. It looks like the Biden administration putting a little bit of heat on OPEC, saying, we think prices are a wee bit too high out there. Maybe you folks need to turn the spigots back on after turning them not quite off, but tuning them down a bit out there. So a little bit of pushback out there on the OPEC front. We'll see if that materializes in some sell-offs out there. At least net on the week, the answer to that is no. Coming into showtime, WTI at about a 69, almost exactly, up pretty much 0.75 of a point, or about 1%. If you're wondering, active week for WTI as well, 549,000 contracts on the tape. So beating Nat Gas by almost 100,000 contracts. So a lot of paper here in WTI this week. And unlike our other friends out here, and again, kind of flipping that script on WTI where people don't really like to trade the weeklies, the actual SEP contract has eroded down to 5 days to go now. And that is where about 45%, nearly half of that 549,000 contract went up in that contract. And it's going to be hard to parse vol. We'll have to go a little bit farther out to parse the vol. I'll tell you what, listeners, we'll go out to, we've got a weekly expiring here in about 15 days. We'll go out to that one. That'll give us a little bit of a sense. That one didn't do a lot of paper, though, 0.2%, but that'll give us a sense of the vol, at least out here. That vol is about a 33.7 off about 3.5 points. If you're wondering, in that SEP contract with 5 days to go, that vol is about almost a 30, 29.75, off 8 points. But again, take that vol with a huge grain of salt. It's kind of hard to really talk about vol in meaningful terms with 5 days to go. It's mostly gamma at that point. I guess we'll just bite the bullet. I will tell you what the skew is in this contract. But again, take these numbers with a grain of salt. Only 5 days to go. The puts last week, 7.2% rich. This week, 10.1%. So the puts getting a little bit more bid. The calls last week, 4.4% cheap. This week, 8.7% cheap. So back to your question, Alan, the quote-unquote mysteries of that skew in that very, very aberrant short-dated skew, the puts are heavily bid. The calls are heavily offered. Does seem like some folks may be thinking, at least in that near-term contract, by the end of this contract's life in 5 days, we might have some more downside, but more before some upside. Let's go a little bit farther out, so just to answer your question, to see what we can look at from an overall skew perspective. Let's go to October. That contract has 35 days to go, and it still did a lot of paper. 27% of the paper went up in October. So let's go a little bit longer term and see. The vol there is about a 33. It's off about 4.5 points this week. The skew, let's see. Last week, the puts were 10.8% rich. This week, 11.3%. So getting a little bit more bid, but not quite as aggressive as what we saw in that nonsense 5-day skew. And last week, the calls were 7.9% cheap. This week, 9% cheap. So the same trend playing out here in October, a little bit longer term. Puts getting bid, calls getting offered. Let's see. Let's look at DEES really quickly. DEES was about 11.5% of the paper. So this is pretty much through the end of the year here now. We got a vol at about a 33, off about 2.6 points this week. The puts last week, 11.9% rich, so even more bid. And this week, 12.7%. So the puts getting bid again. Calls last week, 7.7% cheap. Unlike the other months, though, the calls staying about the same. So the calls still 7.7% cheap this week. So even going out through the end of the year, you have to imagine if the Biden stuff is going to have any impact, it would be felt before the end of the year, listeners. Then we are seeing puts getting a little bit more bid. The calls are still offered, but they are pretty aggressively offered already in D's, probably why they're not getting hammered too much more. But yes, looking at this skew, this is kind of going back to what we used to see back in the days when folks were fading the upside in WTI pretty aggressively. Remember the conversation? It seems like a long time ago now, and from a price perspective it was, but we used to talk about the 40 handle all the time. Can it maintain above the 40 handle, or will it drip back into the 30s? And we used to see those puts bid, the calls offered. This is very much an equity type skew, and we're seeing that shaping up again here. So it does seem like in the near term, all the way out through the end of the year at least, there is a bit of a bias, a bit of a concern to the downside here, and not a lot of love to the upside. But that's been kind of a recurring theme in energy. Alan, you're a pro member, so you've probably been listening for a while. And you know that it's been a bit of a head scratcher for us. We've seen all these crazy things. They bombed the Saudi oil fields, you name it. And yet the skew could never really catch a bid to the upside and maintain it for any substantial period of the time. If the calls had any sort of bid, it would kind of go away pretty quickly. So we'll see if that will be the case now, if we can get some movement on these calls, or if all this skew is telling us the right thing and all the action through the end of the year is going to be to the downside, or at least predominantly to the downside in WTI. By the way, speaking of action, let's see what paper is lighting it up since we're out here in energy anyway. It's the weekly SEP, 5 day to go, 65 puts, 28,385 of those have traded this week. The big day was Monday, about 12,500 on Monday, slightly biased towards closing, followed by pretty much the exact same amount throughout the rest of the week. 5,400 on Tuesday, 5,300 on Wednesday, 5,200 today. And looks like mostly or slightly opening really on most of those days out there. So a lot of action on the 65 puts, which again is about a $4 out of the money put at this point, and that's going away in about 5 days here, this contract. So you need to get some action in WTI to the downside to make those 65 puts make sense. The number 2 most active contract out here this week was the 70 calls. Again, that's only a point out of the money. It sounds rich, but it's only a point out of the money. Those are about 18,000 of those. The big day again was Monday, 6,800 on Monday, 5,300 on Wednesday, 3,700 today, and 2,100 on Tuesday. The most OI change we saw was on Monday as well, with about 2,000 of that. Looks like it was opening there. So 65 puts, 70 calls, kind of tight around at the money, not entirely surprising, but that was where kind of our action was lining up. So let's scroll down a little bit. 70 is also printing in October, about 11, almost 12,000 of those. 75 is going up in Dees, 7,500 of those. Let's see really quickly what 4,300 of those traded on Monday, 1,600 on Tuesday, about 1,000 on Wednesday, and about almost 700 today. Looks like they were biased towards closing on Monday and kind of scattered throughout the rest of the week. So again, the calls didn't change that much in Dees. So that 75 strike didn't seem like it really moved the needle from a skew perspective. Let's look really a little bit farther out. There are some puts trading in March of next year, the 45 puts, about 3,000 of those. And if you want to go a wee bit farther out to Dees of next year, the Dees of 2022, you've got the par calls, the 100 calls trading pretty much all today, 4,010 going up today, about 300 going up on Monday as well. So a total of about 4,300 going up this week. Of the par calls, the 100 calls, also worth noting, the 70 trading today 1,500 times, and the 80s trading 1,350 times. Oh, and then the 110s have also traded 2,000 times. So that looks like that goes more in line. So it looks like a couple of verticals going up, 70, 80, not quite 1-to-1, but pretty close. And then the 100, 110, 2,000 by 4,000, 2,000 on the 110s, 4,000 on the pars. So, and there is some size open on the pars and decent actually listeners. 68, almost 69,000 contracts open there. So these could easily be closing, although while you're giving up the ghost on the par strike now, interesting timing, but intriguing stuff nonetheless. Let's look really quickly out here, listeners, see what else is intriguing on our movers and shakers list this week. You know what, listeners, we have seen some action later on in the week here from a vol perspective, so let's head on out to equities next.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, welcome to the equities. Of course, this is the portion of the show where we also break down that product category you folks like to watch called volatility. And there was some vol action this week, though perhaps not what people expected. It seemed like vol might be firming up heading into last week's show, and maybe we were poised for another shoe to drop. That shoe did not drop this week, so we're seeing vol mostly down across the board this week, listeners. RVX, a.k.a. the VIX of the Russell 2000, at about a 24.70 coming into showtime, off about 1.25 points or so from last week. VIX at a 15 handle, listeners. It was flapping around the 15.5 level coming into the start of the show. It's off about almost 1.75 points from where it was this time last week. So all of you who had a 15 handle in our VIX poll, you're looking pretty good right now. I was not calling for a 15 handle, I will admit that. VVIX 116, up about 3.25 points from where it was this time last week. VVIX, if you're not familiar, listeners, is the volatility of volatility itself, aka the volatility of VIX, and it has been moving around a bit, so that's why that number is relatively lofty. And VolQ, aka the at-the-money vol of the NASDAQ 100, aka the newest tradable vol product over there in the CME family, at about a 16, almost even, off about 1/4 point. Not a huge move from a VolQ perspective. So we see the VIX to RVX spread, so the small cap to large cap vol spread at about a 9. That's about 0.5 point wider than this time last week. And that's pretty much because VIX has outpaced RVX to the downside this week. And VIX to VolQ, it's about almost 0.5 point. Actually, a lot tighter. It's about 0.75 point tighter than what it was this time last week. So VolQ stayed the same. VIX came in. That's where we saw that tightening of that spread. Let's head on out now to the equities landscape, see what's lighting it up. Let's kick things off in the land of Russell 2000, because you folks have a lot of questions about what's going on with the upside. What's going on with the upside? Let's find out for ourselves. Of course, because it's an equity, 47% of this paper had to go up in the contract that's going out in one day. This is just par for the course with equity. Let's go out to the week 4 August contract, because that one has 15 days to go, and about 7% of the paper went up there. So at least some paper traded there as well. The vol out there, if you're wondering, 19.86 off about 1.9 points this week. Skew-wise, the puts last week, 13.5% rich. This week, 13.1% rich. The calls, almost 10% cheap last week. This week, nearly 12%. So the call is coming in quite a bit. If you want to know where the action was from an overall most active contract perspective this week, that means you have to go back to that 1 day to go contract in August that has 1 day to go. And we have the 2260. So I said coming into showtime, we're at about a 2242 in the Russell 2000, off a rounding error, off about 3 points or about 0.14%. So not a huge net move week for the Russell 2000. And we're seeing the most active contract, 2260s. It's like opening mostly throughout the week. So those are calls. And since they're going away in a day, they would qualify as small delta now, but not exactly what I think folks are thinking of when they ask that question about the far upside stuff. So let's look really quickly and see if we can see any other far upside action here in the Russell 2000. 2230s trading a bit as well. 2240s, again, most of these not quite as far off as you might imagine. Also seeing 2230 puts going up, which is, again, right around the at the money. Let's look a little bit farther out to see, it looks like this week is one of the rare weeks where we're not seeing a lot of near-term or even longer-dated small delta / upside call action. This is, I guess, a week where folks are taking a bit of a break, and I kind of understand it. The small caps themselves taking a little bit of a break this week as well. So let's take a rare sojourn out there into the E-mini S&P 500 as well. And that's a contract a lot of you like to watch, and a lot of you like to trade out here. Let's see. Let's just give a comparison. We talked about gold doing 100,000 contracts, silver doing about 23,000. We had Nat Gas doing, I think, 460,000, almost 100,000 more for that for WTI. And then coming into today's show, you have E-mini S&P doing 1.2 million contracts. Give you a sense of how much paper is going up out here. And the vol, again, now these are contracts going out in, a day. So that's where 30% of the paper went up this week, of course. That vol is at about an 8, but take that with a bit of a grain of salt. Let's go a little bit farther out, listeners, to another contract that has a little bit more paper. Let's see. And also has a little bit more meat on the bones. It's harder to find one here. It's all 1 day to go, 4 days to go, 6 days to go. There's so much fascination with the weeklies and the equities that, it's almost nothing else trades me. Let's go out to September. Okay, there we go. Let's go out to the monthly September contract that has 35 days to go. And it did about 13% of the paper this week. So it's not like it's a slouch from a volume perspective. The vol out there, 11 3/4. So we're starting to get anemic out there in some of these contracts. Off about 3/4 of a point. In terms of skew, man, we got some sizable bids on these puts. So the puts last week, almost 27% rich. That's a hefty bid. This week, 34.5% bid. Wow, that's impressive. The calls last week, 16.3% cheap. This week, 18.7% cheap. So the calls even cheaper. The puts even more bid. That's probably what you'd expect. Perhaps not to that degree, but we are floating around all-time highs in the S&P, so it makes sense some folks would be bidding for some puts. And the vol is getting cheaper, so it makes those puts overall cheaper, even if the skew is trying to offset that by bidding them up even more. In terms of the most active contract out here this week, that was we're at a 44.53 in the S&P right now. It was the 3,500 puts going out tomorrow, doing 32,852 contracts. That was the most active contract in the S&P 500 E-mini. That is bizarre. I did not expect that at all. We saw pretty much all of that trading in 1 day. Monday, a massive print of 32,852 went up on Monday. All of that opening in the 3,500 puts, listeners. My goodness. Who is opening on this ridiculous strike with a few days to go for such size? Yet they were. Let's see. How do we look here from an overall? Yeah, I mean, the puts got more bid this week, so maybe stands to reason someone was buying those bad boys. But wow, that is not the strike I expected, and certainly not all in one massive opening print like that. 4,300s also traded that day, nearly 16,000 times, 15,625. So maybe a 4,300, 3,500 1x2 Also worth noting, the 4400s trading and 43 halves. So it's kind of weird to see if there was another leg to this, exactly what it would. 4300, 3500, not exactly a spread that rolls off rolls off the tongue. It's almost 1x2, so it could land that way. Both of those were opening. Less opening, though, on the 4300s. They only opened by about 7,000 contracts. The 3500s opening for nearly 33,000 contracts. My goodness. So clearly, those puts are going the way of the dodo, barring some apocalyptic sell-off. I don't think circuit breakers would kick in. We literally cannot get there by tomorrow at this point. So hopefully they sold those and got a hefty premium to do so. I don't think, given the skew move, I don't think they did, but we'll have to dig in a little bit more to see. But, wow. That is not the print I expected when I pulled up the E-mini S&P today. What do you think of those, listeners? 3,500 puts going up 33,000 times with about a week to go. Not even when they went up. That's, wow, that's crazy paper. Speaking of crazy, I would never say you folks are crazy. You folks are, shall we say, interesting. So let's get to some of your interesting feedback right now.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, let's get to it, listeners. Some of your feedback here. Another member of the Secret Handshake Club, Meats with a Z. I just like that handle. He says, thanks for, I guess he enjoys his meat products as well. He says, thanks for the hashtag Hoglove on last week's episode. I always love hearing about non-traditional products on the show. We try to bring you those whenever possible. They're Meats and everyone else who has similar opinions. You know, it's not always possible. Like this week, iron ore would have been a good one, but not really any options to speak of. You know, palladium, lumber, all the same deal. Would love to talk about that with you. They're just not cooperating from an overall options volume perspective. But whenever a, shall we say, non-traditional product makes it onto our movers and shakers report, and it does even remotely interesting or decent volume, we'll try to bring it to you here on the show because, you know, we love doing all of our standards. We love the metals. We love the energies. We love, all the equities and everything else. But sometimes it's fun to sink our teeth, literally and figuratively in the case of Hoglove, into something a little bit different out there. So we keep an eye on those meats. We like those too, just not always viable here on the show week to week. Next up, we got AJ. AJ wants to know, can we get a mid-year correlation update? Well, we're a little bit past mid-year, but because you asked so nicely, AJ, we can do that for you. I've said this before. I will say it again. One of the cooler tools available in the full pro suite over there at Quick Strike, and if you're playing along with the TWIFO reports, you cannot access this, unfortunately. You got to upgrade to the premium level. But if you do that, you can access these cross-asset correlation tools. We've talked about these before on the show. We've run the reports, and it's fascinating stuff. And so AJ asked for a mid-year correlation update. So we can do that, AJ. In fact, I'll tell you what we'll do. We will run one for the entirety of the pandemic era. So pretty much let's go to Jan of last year all the way through to today. So we got kind of the lead up into the pandemic, kicking off really aggressively in February into March, and all the way through to today. And we'll see what we see. And if we run those, let's see. Some of these correlations you're probably going to expect, but others might be a little bit interesting. Let's look first at some of the highest positive correlations we're going to see. Looks like highest positive correlations on the board. We got some you might expect. The 10-year to the 30-year. They're correlated about 93%. Again, this is for the pandemic era, which makes it an interesting period because obviously things have not exactly performed as expected over the past year and a half. The S&P to the NASDAQ, about 92%. Again, that's pretty much in line with what you'd think. Dropping down a little bit, we got WTI to heating oil. They're coming in together at about 80%. Gold to silver, everyone looks at that gold to silver ratio, but here's the gold to silver correlation. That's at about a 78%. So it's holding strong, but again, a little bit shy of the 80% level. And then we got corn to the beans at about 67%. So those are some of the strongest positive correlations. And looks like most of them are pretty much intra-complex, which is what you would expect. You'd expect things within similar complexes, similar products to have a high degree of correlation. And that's what we saw. Let's see, negative correlation. Now we're getting the strongest one we saw here, which is interesting. You thought it might be a little bit higher in some of the other complexes, but the strongest one that we saw was negative 35%, and that was going on the both the 10-year and the 30-year, and their correlation to the S&P 500. So again, everyone talks about that quote-unquote inverse correlation of the rates complex to the equities. And it was the strongest negative correlation that we saw. But again, it's only minus 35%. So I wouldn't really call that inverse. I would call it a strong negative correlation. But if you're relying on only a fixed income product to hedge your equity portfolio, you may have been disappointed with some of the performance on that over the course of this past year. Some of the weirder correlations that kind of jump out to my eye here, we've got the Japanese yen to the 30-year. 50% correlation between the yen and the 30-year. I would not have off the top of my head guessed that one. Also, another weird one, we've got the Euro USD spread, so the euro denominated in dollars, to silver. They had about a 30% correlation over the pandemic era. So intriguing stuff as well. And of course, everyone, when they're asking about correlation, they're really asking about crypto usually. So let's throw that into the mix as well. Bitcoin, the highest correlation, positive correlation that Bitcoin had, actually the highest correlation period that Bitcoin had was to the NASDAQ, 31% positive correlation over the pandemic era, and 29% to the S&P. So again, it's not quite uncorrelated, and it's certainly not inversely or negatively correlated. Some people have tried to make that argument, but I have not seen the data to support an inverse correlation. It is positively correlated, just not a ton. Then again, those days when we do see the massive sell-offs, the days when you really want the Bitcoin crypto portion of your portfolio to kind of do its own thing and buck the trend, those are the days when we have seen Bitcoin have a much higher correlation. Might be an interesting way to break that out too. Maybe only the big movement days in the indexes. Let's see how the correlation shakes up on those days, because those are the days when you need it. And we have seen Bitcoin sell off aggressively on those days when the market sells off. Look back to last March. When the market was getting hammered, we saw Bitcoin sell off 30-odd% intraday. So if you're relying on Bitcoin to be this completely non-correlated asset, these numbers may unfortunately break that perception for you. Speaking of Bitcoin, we got LTM asking here, what about Bitcoin skew? How is Bitcoin skew shaping up? Is it still call heavy? Well, two answers for you here. What was it? LTM. First off, LTM, I would recommend we have a whole show on the network about pretty much exactly that. The skew, the volume, the volatility, all that good stuff out there in Bitcoin and ETH and all the other major cryptos. So check that out if you want a detailed breakdown of that. That's called the Crypto Rundown. We air that every Monday. Hopefully you're listening to that. We can go try to parse the options on Bitcoin that are trading at CME. They did some paper this week, 211 contracts. Now remember, that's a pretty beefy contract. That's a 5x multiplier, but still not a lot of paper really to sink our teeth. That's why we didn't talk about it on the main show, because it's only 200 contracts. But if you are insistent on it in terms of skew, we can look at how it's shaping up on the CME platform. See, the month that had the most paper is here in August. I use most in air quotes. 54% of that 211 contracts going up in August. That is about 15 days ago. The puts last week, 2.6% rich. This week, kind of flat to the at the money. Last week, the calls were 0.5% rich. This week, 3.3% rich. That's, again, take that with a bit of a grain of salt. That's not a lot of paper, really. So you're going to see sporadic kind of skew movements out here in the Bitcoin options as a result. But there you go. That's what it's shaping up for on the CME platform. If you want to deep dive into, let's say, platforms like Deribit and others that are putting up a lot of paper on the crypto front, and including the skew, we break that down every week. Check out our Crypto Rundown program every Monday or on demand whenever you want to listen to it after the fact. To subscribe to the full network if you haven't already. You will get it. I'll wrap it up here with our regular TWIFO question asker. This is Rhythmic Angel. I do like that handle. Rhythmic, we got to see you in the live chat one of these days in the Secret Handshake Club. He says, hello, Mark. Question, do you ever look at futures depth of market data to look at what strikes are heavily being traded to pick strikes on what options to trade? Or do you stick to the OI and the option strikes alone? Thanks. It's a good question. Depth of market, you can talk about depth of book as well, kind of the similar stuff there for the futures or depth of book for a lot of the equities out there. And the short answer to your question, the Rhythmic Angels, I really don't. I mean, it's interesting data, and if maybe if you're working something to do with a gamma scalp, you want to pay attention to that. I certainly used to look at a lot more depth of book stuff in the equities when I was doing a lot of gamma scalping intraday because I had to work my hedges around that. So I was slinging underlying against my options positions. These days, I'm not doing a lot of gamma scalping because it's really challenging to do in most retail accounts. So the short answer to that is no. And also, a lot of times, if you're looking at the option spreads, the options OI, the options skew, that's going to give you a lot of insight into how things are shaping up. And for me, I'm doing a lot of spreads and things out there. So what I want are certain skew setups, certain volatility levels, and that's going to be found more in the options information than in the underlying information. So if you have a heavy action around a certain strike in the futures in your question, that's probably going to translate into more OI, tighter spreads, maybe a change in the skew on those strikes in the options as well. So I tend to get that information, but through what I'm looking at in the options as well. So normally I do not do that either in the futures or in the equities, but sometimes if perhaps I want to drill a little bit deeper, see maybe why a certain product is vacillating on a certain strike, I may go look at the depth of book then and see what's going on. But in general, when I'm lining up my trades there, Rhythmic Angel, I'm not really sitting there and looking at the underlying first. I'm more looking at what's going on from an options perspective, how things are shaping up that way, and then trying to line up my trades accordingly. Great question, though. All right. That music means we did it, listeners. We survived a full hour here. And what a fun hour it was. Jam-packed with products, with your questions. I got to choose which way we went this week, to the dark side or to the light side. So it was a fun week for me. Glad it was. Hopefully it was a fun week for you out there as well. Speaking of weeks, the week's not over. If you want more content, we're back at you tomorrow, noon Central, 1 p.m. Eastern for volatility views. If you like that little snapshot we gave you there of equity volatility, you want some more, tomorrow, noon Central, 1 p.m. Eastern. If you're in the Secret Handshake Club, you can listen live. Of course, if you're subscribed to the network, you can listen after the fact, whenever your heart desires. And then, of course, all of you in the Cool Secret Club come back again at 2 p.m. tomorrow, 3 p.m. Eastern for Options Oddity. That's a fun one where we break down all the crazy paper we're seeing out there in some interesting perspectives. Maybe we'll start rotating in some more futures options. It's just there's so much equity option stuff. It's hard to fit all of that in on the show. You should see how many we pulled together, and then we only can fit in so many. So to squeeze in on top of that now, additional stuff in the futures options space. And also it's a little bit harder because you don't always have the good execution data in the futures options that we do in the equity options. So we can't see if they're lifting offers, etc. It makes it a little bit easier from an analysis perspective. So with that said, might be fun to sprinkle some of that into options oddities. And then, of course, we'll be back again next week. And, of course, you know where to go to learn more about everything we're talking about here on the show today. If you want to check out the reports for yourselves, cmegroup.com/TWIFO is the place to go. And if you want to learn more about everything going on in the world of small caps, or maybe you want to go large cap, Russell 1000, whatever floats your boat, larger cap or smaller cap, you can find it for yourself. FTSERussell.com, FTSERussell.com is the place to go. Give them a follow on the old Twitters while you're at it. At FTSERussell is the place to go. We got to get on out of here. Again, we're back again tomorrow, noon Central, volatility views, 2 p.m. Central for Options Oddities. Then back again next Thursday, another episode of This Week in Futures Options. We'll see you then.
This Week in Futures Options is brought to you by CME Group. the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.